balance sheet. I've been an analyst for more years than I care to admit. I was a partner head of research at 2 multi-billion-dollar hedge funds, and the purpose of this YouTube channel is to try and help you, the private investor. And welcome to the first in a new series, Finance Demystified. I hate the way vested interests make finance seem really difficult. And I'm here to tell you that it isn't as difficult as it sounds. And I'm going to help you in a few different ways. I'm going to help you with these videos on this YouTube channel. I'm going to help you with my newsletter. You sign up on my website, behindthebalancesheet.com. You'll get free news, emails, training materials, access to our community. And if you want to get a bit more serious, we would love you to buy one of our investing courses for private investors. But you don't need to spend money. We'll help you for free. And so let's get started with the very first of these videos where we try and demystify this daft world of finance and take out some of the jargon and explain some of the terms. I'm going to start with the Pietrovsky Score is really not as well known as it should be. The score it was developed by this chap, Professor Pietrovsky. There's 9 criteria and it's used to determine the strength of a company's financial position. It's incredibly simple, statistically proven, yet I never saw it in a sell-side analyst report. I have read thousands, literally thousands of analyst reports, never ever seen anybody refer to the Pietrovsky score. Why not? Let me tell you. There are 9 criteria used to determine the strength of a company's financial position. You get 1 point for each tick in the box. And there's 3 different types of criteria. There's profitability, leverage, liquidity, source of funds, so cash flow and indebtedness, and an operating efficiency criterion. And let me go through each of these. So the first one's profitability. So, and this is so simple, right? Because all you need to do is you need to have a positive net income, a positive return on assets in the current year, positive operating cash flow in the current year. And in order to determine that your earnings are good quality, your cash from operations should be above net income. Not a very hard set of criteria, right? The leverage, liquidity, source of funds criteria is again, this is all so simple. Falling leverage, so a lower ratio of long-term debt this year against the previous year. A higher current ratio, the current ratio, very simple, current assets over current liabilities. Higher current ratio this year compared to the previous year, so that means that you've got a more liquid business. And no new shares being issued in the last year. And companies which issue shares, by definition, don't believe their shares are cheap, right? You issue shares because you think your shares are expensive. Obviously, sometimes you issue them to make an acquisition and the value's in acquisition. But generally speaking, if you have companies that aren't issuing shares, that's generally a good thing. And then these 2 operating metrics are really important. Improving gross margin. Now, gross margins, I need to do a whole video on gross margins, but improving gross margins generally indicates the quality of the business is improving. It generally indicates some pricing power. And a higher asset turn simply means that you require fewer assets to generate $1 of sales. So a higher asset turnover ratio compared to the previous year. And look, you don't need to know how to calculate all these things. You just need to look at what the F score is. And this is the F score for Microsoft. It scores 7. And this is some high scoring companies that I found in the UK. And this is old. I don't want to tell you to invest in these businesses. This is way out of date and I don't want you to pay attention to this in terms of your investing today. But you can just see the sorts of companies that are coming up on this sort of criteria as being good, financially strong companies. And here are some companies that come out more weakly. And you know, Burford Capital was obviously the target of a short sellers attack. I actually happen to think that there's some attractive qualities about Burford Capital, and we can talk about that in another video. But that was the first of our Finance Demystified series on the Pietrovsky Score, a really useful tool to keep you out of trouble. Don't forget, have a look at the website behindthebalancesheet.com. There's blogs on there, lots of interesting stuff. Please subscribe to the channel. I'm on a competition with my kid's mate who is beating me because he's got a channel on Minecraft. My channel is good quality content. Please subscribe, and I will see you on the next video. Thanks for watching.